Hey everyone, it's Larry Berman here. Uh, 2025 has started off with quite a lot of volatility. Um, we saw an exceptionally strong U.S. employment report. Um, I think far beyond even the widest of estimates. Unemployment rate came down. Survey of University of Michigan sentiment saw inflation expectations jump dramatically. Um, I guess it's wrapping in now the realization that President Trump and his policies and tariffs in particular are going to be a bit of a challenge. We'll see how all that plays out. But the rhetoric in, at least in the last couple of weeks, around Canada being the 51st state, first of all, gentlemen, including Mr. O'Leary, it wouldn't be the 51st state. It would be the 51st through to the 62nd, because we've got 10 provinces and 3 territories. You'd have to add 13 more. Anyways, semantics, I guess, because there's no way all the provinces in Canada will get together into one unified. We couldn't do that if we tried in Canada. But the United States of America, including all the provinces. Anyways, guys, it's not going to happen. And it's a joke and a meme more than anything else. And it's Trump and his style of negotiating. So we're going to see the USMCA likely opened up again. Tariffs are going to be threatened and slapped on. We're going to get a new government here in Canada. Let's hope, almost certainly. My friend Pierre is going to be the next prime minister. It looks like it's only Chrystia Freeland and Mark Carney, if he throws his name in the ring, as the leading contenders at the moment. Jolie and some of the others seem to be pretty far behind in the poly market sentiment. A lot of things can change between now and then, of course, but it looks like late April election here in Canada. We'll see on that. So let's take a dive into the chart room and see what we learned this week. So the S&P 500 took out some support levels, the previous two lows that were reversed quite handily. But of course, trend is highs and lows. So you now have an established series of lower highs, clear. You have an established, very slightly as of Friday, lower lows. And so the short to intermediate trend is correcting. First area of support is the gap from the US election. So I would expect early this coming week, we will test that. If we can't hold that, we go to the bottom of the pre-election range. And if we can't hold that, the 200-day average. I think those are all in play, possibly between now and the inauguration, certainly between now and the February 5th quarterly funding announcement. That's where, what we're going to hear about how Treasury going forward is going to plan on funding deficits, because make no mistake, there's going to be deficits. The Tea Party part of Congress wants spending cuts. Nobody else does. You cut too much, and while the fiscal outlook might be a bit better, I don't think they can cut enough to make a difference. Bonds are going to be a challenge for a while, especially when inflation expectations by way of sentiment uptick, actual inflation, which we'll see this week in US CPI, and then, of course, the strong labor market that's persisting in the US. All those factors together should make for a better earnings season as we get into earnings now, but are challenged to valuations. So it looks right now that it's catching down as opposed to broadening out. If we only knew for sure, right? Anyways, on the fixed income side, the US 30-year hit 5% this week. Last time we were up here, massive buying opportunity. I don't expect it to be different this time around. Fed pivot in here. There's no Fed pivot here. So bond market rally. What is the catalyst? Well, the refunding announcement we need. The last bond auction was actually decent. So there is demand fundamentally with higher yields. Good. Unlimited supply coming. To me, the Fed has to possibly stop the balance sheet runoff. And so they won't talk about that until later in the year, I don't think. They're still autopilot mode where the runoff is not a big consideration. And some really smart people who follow Treasury and supply and everything say the Treasury does have to go back to issuing more coupons. A lot of this sell-off almost exclusively is due to front running of that longer supply coming. So I would expect into that supply as a buy. I think the long end of the curve is attractive at this point. TLT back at 85, which is kind of where it was in this area, 83, 85 range. So, we're back there again. I think you got to back up the truck here if you're worried about the economy at all on duration. Well, everybody else is starting to panic. Every 5 minutes, Wall Street's worried about 5%, worried about 5%, worried about, months ago they told you it's not an issue. Now they tell you it's an issue when we're there already. So, the streets sometimes and mostly, behind the curve. After this strong employment report out of the U.S., we're pretty much down to one rate cut priced into the curve. My good friend Andy Constant, who runs a fund for us, Alpha Seeking Fund, Global Macro at Q Wealth Partners, extremely uncorrelated returns. Andy has a very, very dynamic process of being long and short currencies, bonds, equities, commodity markets. Really, really exciting strategy, and happy to be partnering with Andy. His biggest positioning is looking out into the middle of 2026 and saying, no, higher for longer, harder landing, more aggressive rate cuts. So they've priced out all the aggressive rate cuts. At some point this year, they're going to have to start pricing them in again. When is that? I don't know. But the middle of 2026 looks really cheap on the SOFR curve. Anyways, so yeah, how's this going to play out? I think we catch down a little bit here. I don't want to present a real bearish case because the economy is still strong. So earnings are going to mitigate and help likely. But oh my goodness, if companies start telling us they're going to be missing and they're revising down their forecast, bigger correction coming. So a bit more volatility on its way, it would appear. The message of the market was this week. Have a good one, everyone.